Okay, traders, welcome back. I want to start by asking you all one question. In 2025, if there was one indicator that you could learn that could give you profitability in the markets, what would it be? Well, a lot of traders, they point to this thing over here, right? They talk about the power of three indicator by 2 degrees, right? And this is an indicator I am going to speak about. It is the daily power of three that I use, or the 4-hour power of three. This is very good. So let's quickly go over the indicators of this, right? So a lot of influencers out there are using this to their advantage, right? So how it works essentially is you've got the daily, I use a New York midnight opening price. And these are my settings. So you can pause the video, maybe screenshot and have a look at these, right? But this indicator alone is not going to make you profitable, right? Now from here, I've kind of screen replayed this and I'm showing you a fair value gap from the New York session. This was actually the market open, 2:30 UK time, which is 9:30 Eastern. Now when price comes back into this zone, we're looking for an entry, right? So price here is hovering just above, and we're going to be understanding how you can use order flow to your advantage to get into this particular trade, right? So as you can see, price comes in, and then we have a retest and price really begins to rocket. So from here, this was roughly the entry. I mean, you want to be trading at the level with a stop loss just below the level low, right? The level mitigation. And your first target is going to be over here. This is going to be your first target, but ideally you want to be going for 2s and 3s off, right? This trade again really had high potential, which I wasn't able to catch myself to that level anyway, but this trade really panned out. We are going to discuss how you could have taken advantage of order flow at this area. So we're going to be dissecting price in this region, and in this region, right? So these are the three regions we are focusing on as an order flow and ICT trader. And the way we do that is by coming onto this thing here. So this is the same chart on NQ, and we're going to be dissecting again what happens over here, and over here, right? So when we come into a fair value gap, there's essentially a few things I'm looking for. This video, I'm really going to begin to sum it up in a way that traders can understand. When we come into a bullish fair value gap, we want to know that aggressive sellers are not being rewarded. So when we come into a bullish fair value gap, which is essentially what we've come into over here, right? So price over here is coming to a bullish 15-minute fair value gap. Yeah, 15-minute fair value gap. What is happening in these circled regions? Well, let's kind of break this down. Let's start over here. What we're looking for, again, for those who have seen the previous videos, we are looking for aggressive sellers to come into the zone. So it's really interesting when you look at this candle over here. This candle is very interesting. So of course we have the left and the right number, we have the bid and the ask. So the bid represents aggressive sellers and the ask represents aggressive buyers. Now for those who have not seen the previous videos, I highly recommend checking them out because that will give you an insight as to the basics of order flow. So I'm not going to be going into the basics over here, but I'm going to be dissecting what's interesting as a trader that you should really take on board. The first thing is when we have a massive red candle over here, we actually have a ton of aggressive buyers over here as well. This is really interesting to understand that even though we have a red candle with a lot of heavy selling momentum, we have aggressive buyers showing up here, aggressive buyers showing up here. And that is the first sign that we could see a reversal from this area, because we're seeing aggressive sellers being met by aggressive buyers. That is the most important thing. Now from here, as price comes into the zone, it's what's even more interesting is that we have a ton of aggressive sellers over here, right? This is shown via the delta. Let's zoom in and understand what we mean by this, right? We see a lot of red delta over here. Let's quickly read the numbers, right? We have 162 for 36 and we have 440. The same thing happens over here with this red candle. We see majority of the delta is red. Now to quickly go over the delta once again. The delta is essentially the ask minus the bid. So when you have a red delta, this means that the bid is negative, which means that there's more aggressive sellers than there are aggressive buyers. Now think about this from a trading perspective. When you come into a bullish fair value gap and price is aggressively selling off, but the market can't break this zone, right? Because remember, the zone is over here. Again, if we go back to the regular candlestick chart, the zone is over here. So what you're seeing essentially is you're seeing a ton of aggressive sellers within this region. This region is full of aggressive sellers over here. Now, when we go back to the footprint charts, we're beginning to dissect this as a shift of the delta, a shift of aggressive sellers to aggressive buyers. So what we're seeing is aggressive sellers fail, aggressive sellers fail. Aggressive sellers have failed to take price lower and price is actually broken above this zone. This is the first sign that the fair value gap is strong. So one strategy you could use at this particular area is once you've seen that aggressive sellers haven't held over here, you can position yourself for a long trade over here, right? So you can have a stop loss below this area, and you can target this high over here for a nice 1 to 1.5 or even a nice 1 to 2 hour trade. That is one way you can trade the markets, and that is a very profitable strategy. Now let's understand how you can take retest entries, because this trade opportunity was really good on ES and NQ. You had a second trade over here, and you could have had your stop loss slightly above, right? That was one entry you could have taken. And you also had a third entry, which is over here at the level as well. You can have the same kind of stop loss over here. So these were all fantastic trades that played out, right? This one, and of course this one, they all played out. Now, the trick with this trade is to understand what was happening in this region and this region. And this is what we're going to break down in the markets right now on the footprint charts. So on the footprint charts, as you can see, price breaks out of this level over here. So we see a ton of aggressive buying step in. Now, as price comes back in to retest this area, we have a ton of aggressive sellers. So at this point, we've established that aggressive sellers have failed to drive price lower. This is what confirms the fair value gap to be strong, right? This is a strong bullish fair value gap. And the reason we know that, once again, is because of this delta. And what I want traders to understand is that we cannot predict this information simply by using candlesticks, right? This candlestick, they're not telling us who's actually aggressive and who's passive. So what this means, I want traders to understand now, we had a lot of aggressive sellers in this region, right? This was a lot of aggressive sellers. We had a lot of aggressive sellers in this region. Now, this here is what we call absorption, right? When we see a ton of aggressive sellers within a particular region, right? The sellers in this region were being absorbed. None of them were being rewarded. And we can see that via the footprint charts, because the footprint charts essentially tell us that we have tons of red delta with no reward. And what's interesting is that we see some aggressive buyers that are creeping in over here. We see aggressive buyers. So this is showing us that sellers are struggling. Sellers are struggling at this fair value gap, which shows us it is a strong fair value gap. So when we go back to the regular price action chart, if I replay price, we talk through this candle by candle, right? So again, we're looking for those aggressive sellers to come in. Price comes in. These were tons of aggressive sellers. Again, aggressive sellers. But were they rewarded? No, they weren't rewarded. And the reason they were not rewarded is because we have failed to break this level, right? Price has come in, we've kind of retested, we've kind of mitigated this level, and we've headed higher. So when you break this price action down from a footprint chart perspective, you can begin to see how the aggressive sellers have failed. This tells us that the fair value gap is strong and we should be looking for buys. We also get extra confirmation over here as well. This is the second entry you could have taken. Let's take a look at this. Aggressive sellers into the zone, and they were met by aggressive buyers. So when we see tons of aggressive selling down here, we see 20 for 0. So there were 20 aggressive sellers with no reward. This means that the buyers are very much in control. And that's something you see, and that's something that's reflected by the footprint charts. So your first entry could have been the first break above the level. That was a good entry. Now the second entry, which is what we get over here, price does come in, but price breaks to the upside. So we see two large buying candles after aggressive selling has failed. And that's exactly what we see over here. It's the same candles over here. Aggressive selling is not being rewarded. Now, if we understand things one more time in terms of the buyers and sellers, let's quickly clear up the chart a little bit. As price comes into this area, right? As price comes into this area, it left a 5-minute imbalance, right? This is the 5-minute imbalance over here. This right here is a 5-minute inefficiency or a 5-minute imbalance. We are looking at price in this area. So if we just continue to play price on, we see a break above this area and we're looking now for a retest. So price comes into this area before breaking higher. So I want traders to understand one thing, right? When you see price action like this, right? When you see a large wick over here, when you see a large wick like this, we are going to be dissecting and understanding what this means, right? You are all going to walk away understanding what this candle actually means. Now, this candle was represented here, right? This candle was represented here. Pay attention to this candle. I want traders to understand how interesting this is, right? This candle over here. First of all, we had a 0 at the bottom. What does a 0 represent, right? I was answering some Instagram DMs about this, right? So, but 0 on the bid, right? Bid and ask. A 0 on the bid represents that there's 4 aggressive sellers in this case and no aggressive buyers. So think about this. If there's no aggressive buyers, but the market moves up, this tells us that the buyers have to be in control. Because if there's no aggressive buyers hitting the ask and the market still goes up, this means that there's a ton of passive buyers sitting there. And this is the difference. When you see a fair value gap, you're looking for more passive buyers for a bullish fair value gap. You're looking for more passive buyers than aggressive sellers. If you can understand this, you will be a profitable trader. There's nothing holding you back. It's about understanding the order flow and how to read it with fair value gaps. This is the most important thing. And the other interesting thing is, yes, we've had a red candle over here with a massive wick, but this wick was full of aggressive buyers. You can see there was more aggressive buyers than there were aggressive sellers. And you can see that via the color-coded delta. So when we head back to the regular candlestick chart, which is what we're all familiar with, right? This here was a fantastic entry you could have taken, right? You want to have your stop loss just below the wick, and you want to be targeting the highs, right? So you understand we have a trend line liquidity forming over here. You want to be targeting the highs over here. That's a 1 to 2 hour trade, right? Just from over here, 1 to 2.5, depending on how you managed it. Now this trade, of course, rallied to the upside with huge R multiples. But the main thing I want traders to understand is that there were more aggressive sellers than there were aggressive buyers. And that is the reason why price moved up. It is not power of three. It is not for liquidity or time or anything like that. It is the fact that there's more aggressive sellers than aggressive buyers at a fair value gap, which means that passive buyers are stepping in to drive price higher. So when there's more aggressive sellers than aggressive buyers and the market fails to move down, this tells us that there's passive participants, there's passive buyers that are present, willing to move price higher. And that is that's kind of the backbone of order flow. That's kind of the backbone of how I trade, right? Nothing held back. So again, if you are interested in order flow and ICT, I've got a free guide, a free checklist. So comment the word checklist in the comments and I'll be more than happy to forward that to you. I'm also offering free one-to-one sessions within Price Action Labs for anyone who's interested. So if that's something that interests you, again, hit me up in the comments and I look forward to hearing from you, and I will look forward to seeing all of you in the next video.